Hey there, fellow investors. Welcome back to the Dividend Uncle channel. Today, we're diving headfirst into the tumultuous world of Lendlease Global Commercial REIT, a topic that's likely been on the minds of many of you out there. Over the past 2 months, this REIT has experienced a rather steep decline, with its share price tumbling a whopping 21%. Now, that's got more than a few investors wondering what to do next. Let's break it all down. The whys behind the slide, understanding the recent decline. So, why has Lendlease Global Commercial REIT taken this sudden hit? Well, there are a few key factors at play here that we need to consider. Gearing up. One significant reason for concern is the REIT's gearing, which has climbed above 40.6% as of the end of June 2023 after the acquisition of JYEU.SI in 2022 and 10% stake in Parkway Parade in June 2023. This has raised some eyebrows, as high gearing can amplify risks during turbulent times. Interest rate coverage. Another crucial metric is the interest rate coverage ratio, or ICR. As of the end of June 2023, it stands at 4.2 times, down from 4.6 times in the previous quarter. The adjusted ICR is at 2.1 times. This means that the REIT's ability to service its interest expenses has slightly weakened. Interest expenses rising. Here's the kicker, only 61% of Lendlease Global Commercial REIT's debts are fixed-rate loans. With interest rates on the rise, this has translated into higher interest expenses, further affecting their financials. DPU dips. Despite some positive rental reversions of more than 4 to 5%, the distribution per unit, DPU, has gone down by 3.2% year-on-year, due to higher interest expenses as mentioned earlier. This drop in DPU despite strong rental reversion is not the kind of news investors like to hear. Navigating choppy waters. What should existing investors do? Now, let's address the elephant in the room. What should existing unit holders do in the face of this share price slide? Well, the Dividend Uncle is also an investor in Lendlease Global Commercial REIT, so I'm in this with you, so let's talk strategy. First and foremost, we need to brace ourselves for some short-term turbulence. Given the current economic environment of rising interest rates, the financials and distributions of the REIT are bound to feel the pinch. However, here's where the silver lining lies. I'm confident that the REIT managers will weather this storm. Lendlease Global Commercial REIT isn't in the same boat as some other troubled REITs, like Manulife US Trust, which ran into problems due to breaches of their financial covenants. Although Lendlease Global Commercial REIT gearing is relatively high, similar to Manulife US Trust's gearing level when its troubles started, what tipped Manulife US Trust over the edge was slump in valuation of the underlying properties, by about 25% over less than 1 year. On the other hand, Lendlease Global Commercial REIT's properties are fundamentally robust. They're primarily in Singapore's retail and office sectors, where both rentals and property prices have been on the upswing. The rental reversion of the retail portfolio went up by 4.8%, while the rental reversion of the office portfolio went up by a higher 5.9%. Possible management actions. So, what's in this REIT's playbook? Here are some potential moves. Analysts have mentioned the possibility of selling assets, such as their Italian property. However, executing this in the current European property market climate is no walk in the park. Another strategy could involve hedging more of their debt to fixed rates to mitigate the impact of higher interest rates. Alternatively, they might choose to ride out the interest rate cycle, taking cues from CDL Hospitality Trust, which deliberately decided not to hedge too much of their debt to avoid potentially expensive interest rate hedging practices, a stance that comes with its unique set of risks. While not the most popular option, equity fundraising is on the table. However, this might be met with resistance due to the recent declines in their stock prices and their recent fundraising activities. Convertible Perpetual Preference Units, CPPUs. This option was used by Fraser's Commercial Trust during its early days of transforming from Ulco Commercial Trust, when its gearing was very high. The CPPUs did not count as debt for gearing ratio purposes and thus helped reduce the debt level when the REIT needed it most. Investor strategies. So, where does this leave us, the existing investors? It ultimately depends on your individual circumstances. If you've got a significant concentration of Lendlease Global Commercial REIT in your portfolio, say, 30 to 40%, which I hope you don't, it might be wise to consider trimming your holdings to reduce portfolio volatility. If you have a reasonable 5% or less of your portfolio in the REIT, you might opt to ride out the storm, while looking forward to better days. If, like me, you believe in the long-term prospects of Lendlease Global Commercial REIT, then we should stay the course. In the world of long-term dividend investing, we weather the short-term volatility, and perhaps even consider some dollar cost averaging along the way. And while we do, we can savor those yummy dividends. Final thoughts: weathering the storm together. In these moments of uncertainty, it's crucial to remind ourselves why we invested in Lendlease Global Commercial REIT in the first place. The long-term vision of this REIT remains intact. Its properties, mostly situated in Singapore's vibrant retail and office sectors, continue to display resilience in the face of economic fluctuations. This isn't a ship adrift in a storm, it's a vessel with a steady hand on the wheel, navigating through choppy waters. As seasoned investors, we've experienced market volatility before. We understand that the road to wealth isn't always smooth. It's about discipline, resilience, and unwavering belief in our chosen investments. Lendlease Global Commercial REIT has a track record of delivering consistent dividends, and I'm optimistic about its ability to steer past the current challenges. Remember, we're in this together, fellow investors. So, keep the faith, keep learning, and as always, happy investing.